Before you swipe your debit card on a small purchase, make sure you know whether your bank can approve it and charge you an overdraft fee. A $10 lunch or a few groceries can turn into a $35 charge if your account is short, and if more payments hit before your next deposit arrives. One small mistake can become several fees before you even realize what happened. So, have you ever checked your bank app, thought you were fine, and then later saw a fee or a lower balance than expected? Let me know in the comments, because this is one of those banking issues where a lot of people are not being careless. They're dealing with timing, holds, auto pay, and rules that are not always obvious. So, an overdraft happens when a transaction goes through even though there is not enough money in the account to cover it. The bank pays the transaction, your balance goes negative, and then the bank may charge a fee. The frustrating part is that the fee is usually a flat charge, not a small percentage of what you were short. So if you had $18 in checking and spent $24 at the store, the problem is not just the extra $6. The real hit could be the shortfall plus a fee that is much larger than the purchase itself. And that is why overdraft fees feel so punishing. They can come from coffee, gas, groceries, a debit card swipe, or a bill that posted earlier than expected. For someone with a comfortable cushion, that may be annoying. But for someone trying to stretch money until payday, one fee can mean less money for food, gas, medicine, or another bill. Now, banks often describe overdraft coverage as a service, and there is a reason for that. If rent, utilities, insurance, or an important check gets declined, the customer could face late fees, return payment fees, or a bigger mess. That side of the argument is real, but the service can become very expensive when it covers small purchases or when several transactions post close together. The first setting to check is your opt-in status for ATM withdrawals and one-time debit card purchases. Federal rules generally say banks cannot charge overdraft fees on those transactions unless you gave affirmative consent. In plain English, that means you usually have to opt in before the bank can charge you a fee for covering a debit card purchase or ATM withdrawal that overdraws the account. So before you assume your account is set up the way you want, call the bank, use the app, or check your account documents and ask one direct question. Am I opted into overdraft coverage for debit card purchases and ATM withdrawals? If the answer is yes, and you do not want small debit purchases creating fees, ask how to opt out. And if you opt out, those transactions will usually be declined when there is not enough money, and that may be a better guardrail for your budget. But this is the part many people miss. Turning off debit card overdraft coverage does not automatically block every possible overdraft fee. The opt-in rule is mainly about ATM withdrawals and one-time debit card purchases. Checks, automatic bill payments, recurring debit charges, and ACH payments can still create overdraft or insufficient funds problems depending on your bank's policies. So if your car insurance, phone bill, loan payment, or subscription hits before payday, you may still have a fee risk. That is why your second question should be more specific. Ask your bank which transactions can still trigger a charge if your account does not have enough money. Ask about checks, automatic payments, recurring debit card charges, transfers, and insufficient funds fees. Do not just ask whether you have overdraft protection, because that phrase can mean different things at different banks. Also, pay attention to the difference between overdraft coverage and overdraft protection. Coverage usually means the bank covers the transaction and charges an overdraft fee. Protection often means your checking account is linked to another account, like savings, a credit card, or a line of credit. If checking is short, money may be transferred from the backup source. That can be cheaper than a standard overdraft fee, but it is not always free, so ask whether there's a transfer fee, interest, or any limit. Another major cause of overdrafts is timing. A banking app may show a balance that looks safe, but some transactions are still pending. Gas stations, hotels, rental car companies, and restaurants can place temporary holds. A paycheck can be delayed by a weekend or holiday. An automatic payment can post before your deposit clears. So you may feel like you checked your balance and did the right thing, and still end up surprised later. A practical habit is to treat your displayed balance as a rough guide, not always the exact amount you can safely spend. If your app shows $80, but you know a $60 phone bill is pending, you do not really have $80 to work with. You have $20 before the next deposit, and maybe less if another hold or subscription appears. Mentally subtracting pending bills can prevent a lot of frustration. Also, low balance alerts are another simple tool that people overlook. Most banks let you set a text, email, or app alert when your balance drops below a certain amount. You might choose $100, $50, or $25, depending on your situation. The alert does not fix everything, but it gives you a warning before a small purchase or automatic payment pushes the account negative. And if building a big cushion feels unrealistic, start smaller. A $25 or $50 buffer in checking can still prevent some overdrafts. It is not a full emergency fund, but it creates a little space between you and a fee. For people on a fixed income or living paycheck to paycheck, that small cushion can matter because the timing of bills is often the real problem. Reviewing automatic payments may be even more powerful. Look at the dates for rent, utilities, insurance, subscriptions, loan payments, and credit cards. If several bills hit right before your paycheck or benefit deposit, call and ask whether the due date can be moved. Many companies allow date changes, and lining bills up with income can reduce the chance of a negative balance. If you do get hit with a fee, do not assume there is nothing you can do. Call the bank quickly and ask whether they can waive it as a courtesy. Be calm, be direct, and explain what happened. If you rarely overdraft, have direct deposit, or fix the issue right away, some banks may reverse the fee. There is no guarantee, but asking is worth it, especially if the fee is taking money away from necessities. It may also be worth comparing banks or credit unions. Some accounts have reduced overdraft fees, grace periods, small no-fee buffers, or no overdraft fees at all. If your current account keeps draining money through fees, that is a sign the account may not fit your life. A bank account should help you manage your money, not make a tight month even tighter. And one more thing, if overdraft fees keep happening, do not treat that as a normal cost of having a bank account. That is a sign to slow down and look at the setup. The account, the alerts, the auto pay dates, or the bank's fee rules may not be working for your actual life. So it really is simple. Overdraft coverage can help in a real emergency, but it should not be something you discover only after a small purchase becomes an expensive surprise. Check your opt-in status, set alerts, watch pending payments, build whatever cushion you can, and ask for a fee reversal when one happens. The safest customer is not the person who never makes a mistake. It is the person who knows the rules before the mistake costs them money.